This is just AMZN on Tuesday, March 24th, 2020. Taking a look at the daily, we had a really nice bullish retest gap, opened up right into our channel, like just as good as it was right here. The high here was 1957. The high today was 1955. So right in that same area. And it makes sense from there. We're going to go back down a bit or something. We did it this day. We did it this day. Really nice hammer. And, we have a small upper wick from where the open was up to a high. This hammer actually reminded me of something going back. We've been looking back over here, and it reminded me of one more, that candle. Really, really close to this channel, just right on the channel. Whether it's, this is the upper channel for where we're at now, but for this channel, being really right on that upper end of that channel there, after a sell-off, that kind of thing, it kind of struck me as being very similar. Now, I don't know if things will play out the same as this after this candle or not, but a really nice bullish retest gap, into a bearish hammer that just wasn't at the best location for a hammer. If you have a hammer, you want it to be at support and want to see it continue higher, which, this channel could continue higher. Like this hammer would be a little bit stronger here where we got higher the next day. Obviously, we pulled back further. This is a better hammer that we then continued up. Or this hammer over here that we continued up. We had room to go. We pulled back a little more on some of these. This one, it's retracing a bigger bearish move. It's below this bigger bearish candle. So again, you can go back and watch the video I did talking about this, going back to October 17th of 2018, because I've been doing videos for a while. We come back to today. Okay, that's the future. Come back to today. You can see there's some similarities there. Okay, picture it like this. You have more bullishness in here, more bullish candles in here than you had then. You had a quicker sell-off from that back then, which is really interesting because Amazon just hasn't sold off as quickly as some other things have, or as far as some other things have. But we've had a bunch of bullish candles in a row. It's just another bullish retest gap. So, but again, we're sitting right here, right on this channel, So if we jump into the 5 minute, so like I said, bullish retest gap. Here's our uptrend channel. We've been following along with this. We pushed through that a bit pre-market, and then here we are opening up. Really, high wave candle right on this line. Immediately break down. We've got a little bit of kind of a small S curve and a bigger S curve, and but this high doesn't take out this one, and so we're going lower. But we've had this line drawn on here for days now. And if I had it up on the screen. Here it is again. Pause the video. I did it yesterday too. Draw this. It worked today tremendously well right here. And rolled down. We rolled down almost 1900. We did later in the day here to 1900. Okay, and 34 cents. We're at a low of 1904 here. But we closed the gap. Essentially closed the gap. Okay, the close was actually a little bit lower. We didn't close the gap technically till here, but we closed the gap from yesterday. Double bottom here, neckline, just kind of an extended neckline. But I wanted to kind of point out something going on in here because I was a little surprised watching this happen during the day today. So right in through here for about 20-25 minutes in here, it's just going sideways, like tremendously sideways. It's consolidating right here in the 21. We've had days that it's held below the 21, but we're just sitting here flat. And the calls during this same time frame, so from 11 o'clock to 11:25, or I'm sorry, 11:20. So 11 o'clock to 11:20. So those 25 minutes of 5 minute candles. There's 5 of them. From 11 o'clock to 11:20. So there's these 5 candles. The calls are going up like a lot. I think it's a lot. It went from a low here about 11 up to 13. And I was in a trade at this point. I got in 10 by 9 right here. I saw it was holding that level really, really well. I got in 10 by 9 and proceeded to just watch the stock, watch the stock go flat all through here and the options going up. And I'm like, okay, I moved my target out because I had my target originally at 12 just to get 2R. And then I moved it up to 15. And then I'm watching this candle break out, this candle break out. It's like, okay, it's actually moving. If it keeps moving, it could get back up into this candle, into this, any of these bearish candles, it could retrace up to those. I'm going to move my target out further. So I had my target at 15, canceled that, moved it out further, moved it out to 18. I saw these upper wicks here. I'm like, okay, I'm going to move it up to 18. And then right before I got to 18, I'm like, you know what? It has so much strength here. I'm going to move it out. I moved it out to 24. That was too far away. Obviously, hindsight, too far away here. But at the same time, I moved my stop up to 15 at this point. So I got up below this candle. And it's like, okay, if it pulls back, I'm stopped out. If it keeps going, it could get to 20 and then 24. It could get there, It didn't. Obviously, it pulled back and had a little slippage on this candle. So the stop was 15, got stopped out at 1477. So getting in at 10, I made almost 5R on that. And it was great. Great trade watching this go up without the stock even doing anything. So that's where you have just some of this kind of stuff happening where you've got some consolidation, you got the squeeze going on, you've got market makers that are or at least the computers, whatever, doing it, that are actually anticipating a move and making it more expensive for people to get in. So if I did not get in over here 10 by 9, I would have missed the chance to do that over here. It was up to 11, 12, 13 before it actually broke out. So because I was already up so much here without it even doing anything, that's why I'm like, okay, I'm moving this up because all it has to do is get going. And I thought there was a chance it could get all the way back up to this line because it retested here and then here. I'm like, it could do it again, come back up to the high from earlier, or at least up to this high. Could get up further. All it needs to do is continue higher. And, these two hammer candles, all it has to do is break up above those, and it didn't. It pulled back. So I could have at one point locked in 8R. That's where wrong way. It did flash up here to 18, so it's possible I could have exited at 18. And I was just looking for more. I was just looking for being up and looking to take some profits higher. But excuse me. But yeah, like I said, I moved things further away, and then I was doing a presentation from 1 o'clock till about 2:40, and I missed this whole move, which actually did about the same thing, 10 by 9, going up to almost 18. From getting in at 10, going up to 15. It could have been that same kind of setup here. I probably would have moved the target out to 18, maybe 17 or 16, just because it, would have wanted to get out a little bit before it got there. So either one of those, 17 or 16, being a little bit lower, probably actually where this bearish candle was, maybe 1650, just because you're contending with some bears coming in here or people getting out of position. So I probably would have been out here. That's if I had gotten in 10 by 9 down here. If you missed that, you actually had a little bit of sideways here. It didn't just move away from you, but you were really back at the same price in the option, but you were much lower on the stock. So like I said, I got in 10 by 9 here. 10 by 9 was available here, just because you move further away from that 2000 strike. For puts, I didn't play puts today. Let's see what you could have done here. This is the 1850 puts. 10 came in at $10 here, didn't really hold this level, get a little bit flat in here. So this was that same area. Well, that's really bizarre. 11 o'clock, this started going up. I'm looking at the puts, 1850 puts. This went up too? Wait a sec. So from 11 o'clock to 11:30, the put went higher. 11 o'clock to 11:30, the put went higher too. Okay, that means that volatility was increasing. That doesn't, I mean, okay. Trying to make sense of this myself. Huh. So there must have been something going on, some announcement, something going on around 11, through this time, because the call went up and the put went up, and this went flat, but both went up. That means volatility had to be kicked up, anticipating a move one way or the other. And so it looks like we got the move up and then a move back down. So that's really interesting that the puts went up all through all this. And I don't know if these wicks are real, if it actually traded down, stopped people out, or gave you an opportunity to get in. If you're getting in 12 by 11, if you got stopped out here at 11, or over here got stopped out, I don't know. I don't know if these are real and if that would have actually happened. But anyway, yeah, that's just really interesting. So there were some opportunities with the puts. It's a little more expensive, a little harder to do. $100 risk. So if we go out to 1,800 puts, which is quite a bit further away, it seems, a little bit thinner, but yeah, it went up. The same time frame went up on everything. That's really bizarre. Okay, well, maybe not in this market bizarre, but anyway, this would have been kind of going flat through here. Yeah, you probably would have had to chase this a little bit. I don't know if you would have been doing 5 by 4 here or 6 by 5 here. So as it's moving up and there's just volatility increasing, probably 6 by 5. And if you missed it here, I don't know if that's real, if that would have actually filled and then stopped you out, but you got that same value here. And this at 12.10 to 12.30, that was this. So very similarly, we were sitting on top of the 1925 strike, and the 1925 pivot went up, and we come back down here, and now we're sitting below that 1925 and putting in inverse hammer here, inverted hammer, and then we roll down. So that's why I'm saying you probably could have done 6 by 5 here, looking for continuation lower after it's doing some of these breakdowns, like getting this candle taken out with this high bullish volume, it wicked down here, inside candle, this is a bit of a flag, and then it breaks down for real, like get a close below. And we really can't get going back above that. I mean, the open is a really strong level. We only got that close above it. Immediately take that out. It just went sideways again for longer here. So just holding that setup like 6 by 5. So you're in that as it rolls over. And obviously you don't get as big of a increase because you're looking at puts and, everything's kind of going down. I'm sorry. You're looking at puts, but everything on the put side is more expensive already. So you're not going to have as big of an increase. So doing 6 by 5 here would have been reasonable. But then getting out for 2R at 8, it even moved to 9, but that would have been holding right into 1900, which you can totally do. It's pretty close to this high, but I would have been getting out at 8 just because that's the same level here if I'd stuck with that, obviously. So if you're getting close to 8, it's like, oh, I think it'll go a little more, knowing kind of, okay, can I move it out half an R or an R? That'd be a little easier to get a little more on the trade rather than going out double or something, that kind of thing. So anyway, yeah, like I said, then it retraced. So here we are. We've been moving up. If we get a gap up and we open up above this level, okay, we got our line. Here, let me do this on the daily here. If we gap up above these wicks, this hammer, this wick, if we gap up here, we can run a bit more. It'd be really interesting if we did that. But we could continue up a bit more here. I don't know that we're going to make an all-time high. Like I said, we have this next channel we could get up into, which would be like 2100. Entirely possible, especially with this bullishness, and it seems like we still have some bullishness, even though this was a bearish candle here. I don't know that we're going to gap up. I think we may gap down and retrace some. I think we could come back down to 1800 into the lower end of this channel. And I think we've got more sideways ahead of us, if not down. But yeah, if we gap up above here, 1972.50, then 2005, I'm sorry, then 1990, then 2005, so we've got some pivots ahead of us that we should have some pauses at, but look to play off the pivots. So today, this was a great play off 1925 bullish retest gap. This was an amazing play down here. It came all the way down to our pivot here at 1898.71. This is one we just drew in January, but it's been working. It's right near 1900, so it's kind of this zone. There's two of these lines here. It's kind of this zone, and I couldn't decide which one, and I've seen the zone work very well. So anyway, really nice bullish plays a couple times, double bottom on this one, just kind of like a Morningstar reversal here. Let's see how the 3-minute looked. Might be cleaner with 3-minute. Inside candle. Highs, no, slightly higher high than higher low. High wave candle, I like that. That's really interesting hammer here. But yeah, 5-minute, 3-minute. There's here, I like that hammer here on the 3-minute. So make sure you're looking at different time frames and you kind of stick with the one you're familiar with or one you really like. But yeah, this doesn't look like as strong as a reversal here as it does with an inverted hammer on the 3-minute. So yeah, we'll just keep an eye out for how things can continue to move. A lot of future ahead of us. If you miss something tomorrow, it's okay. It's going to keep monitoring. So hope this helps. This is just AMZN. Thanks.